Hello everyone, and welcome to this specialist trading presentation of our dynamic duo. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading, and this specific webinar is designed for people who want a little bit more assuredness in their trading. We know a lot of people either have a strategy or a system or some type of methodology that they're currently trading with where they feel somewhat comfortable with, but from time to time it doesn't perform to what they would like. So you want a bit more reassurance or confirmation that the signal is going to be profitable, or at least is going to work somewhat in your way. And that's what we're going to be talking about today, our dynamic duo, which does just that. I'm going to show you a lot of examples and a lot of charts. I want to welcome you once again. I'm Stephen Primo, the president and founder of Specialist Trading. I've been trading for 37 some years. I started off on the floor of the Pacific Stock Exchange. I was a specialist on the floor for 9 years. That's where we get the name Specialist Trading. And I left the floor in the mid-90s to manage money and also to pursue my own trading. About 7 years ago, I started Specialist Trading, where all I do is teach and educate my students on all the things that I've accumulated in my career and things that I currently use myself. Now, we are first and foremost an educational company. You're going to hear me say that a lot because we feel that most traders lose because you're relying on something, some outside source to tell you what to do, either some trading room or chat room or some trading guru, and just blindly taking signals from whatever they're telling you what to do. We feel that that's really a recipe for disaster. What most traders lack and what they need is sound education, things that have stood the test of time, that have worked over time. So that's what we do. We provide you with all the tips, techniques, and strategies that I've accumulated in my 37 years. So hopefully you can either trade these strategies or use the components to develop your own trading methodology. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using our dynamic duo, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you're taking a moment to view our disclaimer, I also want to invite each and every one of you to follow us on Twitter. That's our handle right there, abbreviation for Specialist Trading. It's at SPCLSTTRADG. I post a lot of great free information, current signals or that our strategies may have generated recently. In fact, just a couple of days ago, we had a buy signal off of one of our best strategies for the E-mini and the ETFs to go long. The E-mini made roughly 15 points in the first day or so, and it was also applicable to the spiders where you would have exited yesterday. So this is really good strategies, a lot of great information. We also post information for the Forex currency pairs as well as stocks. So once again, feel free to follow us on Twitter. Now, once again, as I stated in the opening statements, we are first and foremost an educational company. It's our opinion that most traders lose, once again, because you're relying on someone or something, either an indicator or someone in a trading room or chat room or even someone on TV to tell you what to do. Think of it right now. Go and think of your trading. How many times do you buy or sell based off of what someone or something is telling you? You see, we feel that that information should come solely from yourself. You should know enough about what you're looking at in the markets and not be involved with all this outside noise, and just feel comfortable enough to become a part of the process and make your own trading decisions. So what's really lacking, once again, is sound information and education. So that's what we're here for. Even though we have strategies and we have techniques in which to trade, our goal is not simply to force feed signals down your throat, but our goal is to teach you how to trade with the specialist edge. Okay, this is what our goal is, to teach you. The reason why I say this is because I know from firsthand experience, when I first started trading on the floor, I had a miserable time. I couldn't make a dime my first year or two. I've said this many, many times. And so my mentors ultimately got my trading around by teaching me the same things that I teach to all of my students and my members. Okay? All right, so here's what we're going to talk about today. We're going to give you two methods which make up our dynamic duo. Oh, also, before we begin, two things I forgot to mention. First of all, this is going to be recorded, this presentation, so if you have to leave early or whatever, that's fine. But if you happen to have any questions, I know a lot of webinars and different educators like to take questions during the class. I'm a little bit different. I like to take questions at the very end. So if you happen to have any questions, kindly remember them, and we'll get to them in just about 20, 30 minutes from now, okay? So we're going to do that. Also, I'm going to start off by showing you some older charts just for educational purposes. They really just are there so that you can understand how the process works. But then later on in the presentation, I'll show you current charts from the last week or month or so. I'll even show you current charts from the last couple of days, okay? All right, so let's start out with method number 1 in our dynamic duo. And now we'll see that that is the PET-D. All right, so what exactly is the PET-D? The PET-D is a proprietary algorithm. All right, it's something that I was introduced to on the floor that is a simple calculation, but something that, because we didn't have high-speed computers or programmers, some 30 years ago, we had to calculate this by hand. So this was something we could only apply to daily charts. But because we've progressed so much with technology, we've developed this into a proprietary algorithm so that you can now use it for intraday charts, tick charts, weekly charts, forex currency pairs, or even futures. Now what it is a short-term trend identifier. I know a lot of people like to think that this is some type of system or strategy. It can be used to help identify the trend. That's the best thing about it. What it really does, and I'll show you some examples in just a few moments, is how well it identifies the trend. Many times before the obvious things such as moving averages or just highs and lows tell you that a trend has begun. And the way we apply it is by turning it into a color bar tool. All right, so we just simply, once you become a member of Specialist Trading, you can apply this and it will change the colors of your bars. Now here's the way it works. When you get a series of green bars, it just tells you that the short-term trend is up. It's that simple. And when you get a series of red bars, well, the short-term trend is down. That's how easy it is. So now you automatically know whether you are in an uptrend or a downtrend without having to apply anything, without having to look to see if moving averages cross over or see where higher highs or lower lows were, or even look at different time frames. All you have to do is just see what the color of the bar is. Now if we look at this older example in Twitter right here, we see that we had a downtrend right off the bat. It kind of bottomed out and then it went up. Okay, so the short-term trend was initially down for 3 weeks to a month, and then later on it went up. Well, once we applied the PET-D, we see here that at the very top, the bar turned red. All right, so this was telling us now, giving us some type of clue that we were in a downtrend, and it ensued. In fact, we went roughly from 44 all the way down to 30, roughly about 14 points in the next month or so. Now we kind of oscillated back and forth between green and red, and then ultimately we kicked in with an uptrend from roughly 34 all the way up to 42. So this is how simple it works. You see how it can tell you in advance when a trend is about to take place. But just to be safe, just to be sure, our rule of thumb is we like to look for 3 consecutive bars that have the same color. That tells us that we are in sync with that trend. Because as you see here, we turned green, I should say, right here. Had you just simply bought at the market, well, you would have taken a 2 to 3 point loss in the next few days. So this wasn't telling you that a uptrend had started. It was giving you a clue that that may begin, but then we turned back to red. So how do we discern? Remember, we look for 3 bars of a specific color to tell us which trend we're in. So if we look back at the beginning here, we see that we had 3 bars turning red. So that was our confirmation that we were in a downtrend. So roughly from 40 down to 30, and we roughly gained 10 points in that downward move. Now while we were going down, we could have applied any strategy, we could have applied any technique to go short. Or if we wanted to be safe, we could have just told us to get out of Twitter if we were long or thinking about being long. Once we had 3 consecutive green bars, well, that was our signal to get in. So let's say we had thought of purchasing somewhere around these levels. Well, we totally bypassed that. We missed that. And then once we had 3 bars turn green, well, that's the time where we look for some type of setup to get in. If we look at a weekly chart of the E-mini chart, this is a weekly chart going all the way back to 2013, if you see here in the bottom left-hand corner. So we're roughly looking at the past 2 years. Now, obviously, looking in hindsight, we're in an uptrend. But how would we have known which trend we were in, let's say, somewhere back in April of 2013? Well, we apply the PET-D. We see here that the majority of bars starting in 2013, even a little before that, were all green. So this was telling us all this time, in fact, it continues to tell us that we are in an uptrend on a weekly basis. There is no reason on this time frame to short the E-mini, okay, or if you want to look at it as a market index. There's absolutely no reason. Now, we had a splashing of red bars here and there. In fact, we had 2 right here, which were in October. And this was almost going to be turning into some type of downtrend. But because we were on a weekly time frame, we only had 2 bars, and then we quickly went right back up. So we've been long on a weekly basis, the E-mini or the S&P, this entire time for the last 2 years. And you can apply this to the Forex currency pairs. Here's a 4-hour chart of the British pound. Now looking at this older chart, we see in hindsight, once again, we've been going straight down. So it's easy to see once you look back about 3 or 4 days. How could we have known in advance that we were in some type of a downtrend? We simply apply the PET D. We see that the majority bars going down are red. And way up here at the top, we had 3 consecutive red bars. So this was our clue that the trend had now changed to going down, roughly about 1.7080. And that's a good 100 pips to the downside. That's $1,000 roughly in the next 4 days trading just one lot. So do you see how well this works for us? We can even apply this to long term. All right, here is a monthly chart. We're now looking at a monthly chart of the S&P index. This is just an index telling you, what the markets are doing. And you could use this for your long-term portfolio planning and just to see what side of the market you want to be on, if you want to get out and put your money in cash or if you want to stay in the mutual funds. Now, we see these large dips going all the way back 20 years to 1995. We had this really nice swing up, and then we topped out in 2000 in the internet bubble, and then we came down in 2003. We started to go back up again, and we all know what happened with the financial crisis in 2008. We crashed again, and then we have consistently been going up since roughly 2009, 2010. How could we have known what side to be on in these peaks and valleys? Well, we add the same tool, the PET D, and once we apply it, the bars change color. And you see the entire time up from 95 all the way to 2000, we were green except for 1 red bar, which wouldn't have got us out. Remember, we need 3 to get out. Well, we had 3 right here roughly in the middle of 2000, and you could have bypassed this whole crash right here. Once you had 3 more consecutive green bars, you get back into the market in 2003, and you could have exited in 2007, before 2008, when you had 3 consecutive red bars. You would have missed this entire crash and then gotten back in 2009. And every once in a while we had 1 or 2 red bars, but we still have not had 3 consecutive red bars. So until that happens, if you're a long-term investor, you're just going to be long the markets. That's all you're going to be doing. We'll see how easily this is going to be applied to news. We're not going to, guarantee this, but many times students have told us how well this works in advance of news. Let's look at an older chart here of Open Table. We see here that this stock was going sideways basically. It wasn't really doing anything. And then roughly this past year in June going into July, the stock gapped up tremendously, roughly from 70 all the way to 104. News was getting bought out roughly around 104, 105. Okay. Now, had you been waiting for some type of news announcement, you would have missed this. And a lot of people, once again, wait for an outside source to tell them what to do, or you're waiting for someone to tell you what to do. All you have to do is listen to the market, and that's what the PET D does. It listens to the market. It changes the bars either red or green. Now, if we look back and apply the PET D, we see as far back as May, we had 3 consecutive green bars, okay, telling you that we were now in an uptrend, because prior to that, we were actually in a downtrend. All of the bars were red. So with all of the bars green, you could have looked for some type of setup, or if you like to follow fundamental news, or if you had an inkling that this stock was going to go higher, that was your signal that we're now in an uptrend, and you could apply any type of buying technique. I see here there are a couple of buy setups using some of our strategies. So you could have done that, and, well, on the 27th, that was the 3rd day of being green. Well, that was a buy signal if you wanted to just use the PET D as some type of tool or indicator. And it gave you an uptrend signal 3 weeks before the buyout announcement. Okay, so we see how great of a tool the PET D is. It's not a strategy to basically buy or sell off of, but it's an amazing tool to get you in sync with the short-term trend. Remember, it's just a short-term trend identifier, but you see how well it works, how in sync it is many times in advance of what conventional wisdom usually tells us is happening with the trend. Well, let's go to method number 2. Now that you know the trend, you need some type of strategy or technique or structure in which to trade with the trend. Well, our best technique for doing that is strategy number 4. This is our most popular and probably our most consistent strategy out of anything we market or promote at Specialist Trading and Pro Trader Strategies. Strategy number 4 is a great strategy. I use it just about every day on a daily basis with my own trading. And let me give you some of the highlights of this particular strategy. It's basically for all beginners, for all traders, I should say, from beginners to advanced. So it doesn't matter if you've been trading for 20 minutes or 20 years. In fact, we have some hedge fund traders that trade strategy number 4 for their portfolios. We also have some people that have just started trading. Everyone gets the same rules in the beginning. It's for traders looking to catch quick momentum moves. So even though we show you how to get in and out very, very quickly, relatively quickly in this particular setup, we also in the course teach you ways in which to stay in the trade longer if you'd like to squeeze out some more profit out of the trade. If we have to measure its intensity level from 1 to 3, with 1 being the most intense type of strategy where you have to be glued to your computer all day long, and 3 being the least where you just basically enter orders and walk away, strategy number 4 is right in the middle. It's a number 2. It only uses 1 indicator. Okay, that's all we use with this. Why? Because it's a pattern recognition strategy. We're looking for a specific pattern within the bars. Remember, it doesn't matter if we're looking at a 5-minute time frame or if we're looking at a tick chart or if we're looking at a weekly bar. It works the same in all markets and all time frames. And lastly, we supply all of our members with automatic buy and sell arrows. So even though we want you to be able to identify a proper setup, in the beginning, as a learning tool, we give you buy and sell arrows so that you know when a valid setup has been generated so that you can check your work. Now, our edge is consistency. I'm not going to tell you that every trade works fantastically. I'm not going to sit here like some educators do and say you'll be making thousands of % by the end of the month and you'll be supporting your family and yourself for the rest of your life. That's not what we're about. We're about supplying you with education, and all of our methods and techniques have a basic format of consistency. So what does this mean? It means that while at times you might suffer small minor losses, the strategies are tremendously robust. They bounce back. So you have this 2-step forward, 1-step back approach. So when you have a small loss, don't worry. You're going to have this consistency within your trading. And as I stated, strategy number 4 is probably one of our most consistent strategies to date. Okay, so let's look at some of the components of it. What we look for in this particular strategy, first of all, if we're buying, we want to see that we close in the top 25%. That has to be our setup bar. All right, if the bar closes in the top 25%, it doesn't matter if this is a tick bar, a 500 tick bar chart, or a 5-hour chart, or a 5-week chart. It does not matter. We want to close in the top 25%. So in other words, if you take a bar, whatever its range is, and you measure from the very top to the very bottom, okay, so the top quarter, all right, you divide it by 4 equal parts, the top 25%. We want to see it close either right there or in the top 25%. All right, this is an indication to buy according to the strategy rules. This is not, there's about 5-6 rules in strategy number 4. I'm just giving you a couple of the components here today. Now, conversely, if we want to go short, well, we want to see a bar, whatever time frame we're trading, whatever market, we want to see it close in the bottom 25% of its range. So all you do is take the range from top to bottom. We're not concerned with the open or close the way some candlestick traders apply the range. Range means the very top of the day and the very low of the day. So if that's 4 points, all right, we know that if we divide it by 4 separate but equal parts, each quarter will be 1 point. So we want to see that we close in the bottom point here, okay? So this is the bottom 25%. Why? Because according to our proprietary strategy, this is an indication to sell. Now, we also have a couple of other components of this. Buy indications can only be generated above the 50-period simple moving average. So we can only take these buy situations if we're above the 50 period. So you want to see a bar that closes in the top 25% of its range, and it also must be above the 50 period simple moving average. Okay? Conversely, sell indications can only be generated below the 50 period. So we just can't see a bar that closes in the bottom quarter of its range. It has to be below. Remember, I told you there's roughly about 6 rules to strategy number 4. I have just given you 2 of them. Now, you could, if you wanted to, compose your own strategy based off of these 2 very important rules. All right, so let's look at some strategy number 4 examples. These are older examples, but once again, later on, I'm going to show you some examples that are just a few days old. Let's start off with stocks for all you stock traders. And once again, if you happen to have any questions, kindly wait till the end of the presentation and we'll answer anything just about that time, okay? All right, we see here an older chart of Apple. Obviously, price is above the 50-period moving average, so this means we're only looking for those bars that meet all the requirements, and one of them is to close in the top 25%, as we see here, circled in blue. All these bars close in the top 25%, and they all meet the requirements of strategy number 4. So therefore, they were all buy signals. You see how well those work? Very simple. We weren't listening to any news when this was happening. We weren't listening or involved in any chat room or trading room. Just listening to the most important thing, which is the market you're trading in front of you. How about Coach? Okay, looking at this older chart, we see here that Coach in May dropped consecutively below the 50-period moving average. So what does this tell us? It tells us that we're only looking for short setups. Those are bars that close in the bottom 25% of their range. These are these bars right here. Now, there are lots of other bars that close in the bottom 25% of the range, just the way there were bars with Apple that close in the top 25. But they also have to meet the other 4 rules of the strategy, which I'm sorry we can't share with you at this time. But trust me, they're all involved in the chart pattern, and these were all valid sell signals. Once again, you see how simple this is. Once you learn how to spot this particular pattern and trade with this information that I've been using for the last 30 years or so. Now here's a chart in UA. As we see here, where we're going sideways. Someone looking at this could say, well, there's no real direction in this, but you can't see it, but we were above the 50 periods of moving average, and here's a bar chart that closed in its top 25%. So this met all of the rules of strategy number 4. You could have purchased this, and look what happened in the next week. Now UA obviously went up off of some announcement, something happened. Once again, we didn't know that. It wasn't as if someone contacted us in advance and told us that the stock was going to be gapping up 5 points higher. The chart told us, because everything you need to know is in the chart. You don't have to rely on these outside sources which we've been taught are supposed to work. Most of the time, they don't work. That's why roughly 80 to 85% of all traders lose. But when you learn to listen to the market and its patterns, which are extremely simple, they're not complicated at all. As I remember, I told you, we have people that use strategy number 4 that just started trading weeks ago. You'll see how simple it is to be in tune or in sync with the markets. Now, strategy number 4 generated 11 points in just 4 days off of the simple pattern that we look for. How about CMG? Another event here. We're above the 50-period moving average. Here's a valid signal that was generated. And look what happened. Once again, there was some news that was generated 2 or 3 days later. Hey, we didn't care. It wasn't as if someone called me up and said, hey, Steve, tell all of your students and members to go long CMG because we're going to make an announcement and it's going to gap up around 60 points or so. We didn't know any of this information. All we knew was that the stock was giving us a clue that it wanted to go higher. And this is all you need to know. Generated 75 points in just 2 days. And we realize this is a very expensive stock. Many people could not afford to purchase this, but we have a lot of option traders who love to trade our strategies, and they simply just apply the buy and sell signals to going long calls or long puts. So you can apply options to this as well on very expensive stocks. The same concept strategy works in the E-mini. We'll look at an older chart of the E-mini. We're above the 50, and these were all valid buy signals generated on a daily time frame using strategy number 4. We go to a smaller time frame. For all intents and purposes, we are below the 50-period moving average on this 5-minute chart, and strategy number 4, once again, automatically generates sell signals. Now, remember, we don't want you. It's not our philosophy to have you just, rely on a button or any type of a add-on to tell you when a sell signal or a buy signal is generated. We want you to learn how to spot these on your own. And you can also see this strategy working well in the Forex markets. Here's a daily chart of the euro-dollar. We had a couple of buy signals that worked out fairly well, but once we crossed below the 50 period, then we had some nice sell signals telling us to go short the euro-dollar, which started the beginning of a nice, very nice larger downtrend. But I want to show you something because this is called the dynamic duo. Obviously, we've given you two methods, but how do we apply them? And remember, I told you, we're an educational company. We're not going to just sit here and tell you that you're going to make thousands and thousands of percent, because from time to time, we will run into some snags every once in a while. Every once in a while, these techniques will be out of sync with the current market conditions, and we will have some minor losses. So let me show you this scenario right here in SNDK. This was a valid signal that was generated to go long using strategy number 4. Our members could have decided to take the signal or not, but had you taken this signal, it would have ultimately resulted in a loss because it went up for one day and then closed even lower, and then you most likely would have been stopped out. Well, at this point, let's say you were a new member, you purchased strategy number 4, and you said, boy, this isn't working. I had so many hopes and aspirations for this stuff to work, and I took a loss right off the bat. I'm going to sit back and watch it. And then you wait, and a week later, another signal is generated. And you don't take this one because you're kind of a little bit gun-shy right now. So you don't take this one, and lo and behold, this is the one that works out. It makes roughly about 5 points in the next week. So what we need is something to make us feel confident when a signal is generated. And this can happen with any strategy. It doesn't have to be just one of ours. Many times you'll be trading, and you'll be in sync, and everything is working great. But then when you go into those drawdowns or those slump phases, you're afraid to pull the trigger because you don't want to take another loss. What if there was something that could help you have that confidence to take the trade, to know that you were in sync with the trade? Well, so basically we ask ourselves, how can we increase our odds for success when we're trading? And that's when we combine the PET-D with strategy number 4. So we use these great two methods that I've just explained and shared with you, and we put them together. This creates our dynamic duo. We've had tremendous success with this. I'd say the majority of our traders who have purchased this combination have tremendous success, and we have the testimonials to prove it, how well they've been doing. In fact, we have a client, if he's not here in the actual webinar, in India, who we know nothing about the Indian markets. I've never even seen a chart of an Indian stock, and he's had tremendous success. He said he struggled for years trading. It wasn't until he purchased the dynamic duo that he feels like he'll be able to finally get out of debt, and he's going to be just trading full time. So not that that's a guarantee that everyone can do that, but it just shows you how well these methods will transfer over onto any market. So here's what we do when we apply them. For buys, we only trade strategy number 4 buy signals that are colored green. Why? Because if we want the market to go up, we also want the market to be confirmed by the PET-D that the short-term trend is up. Let's look back at that SNDK example again. We had 2 buy signals. One failed miserably, but the other one worked out great. So how could we have increased our odds for success and had that confidence to take the trade or not to take the trade? Well, remember, with buy signals, we need to see that they're both colored green. So if we apply the PET-D, we see that the first signal was colored red, meaning that the short-term trend was still down. Therefore, we would not have taken this trade, and we would have bypassed this loss altogether. Whereas the second signal was colored green. That means it was confirmed that it's most likely a high probability trade. And look what happened. Worked out okay, right? How about sells? Well, we're only going to trade strategy number 4 sell signals that are colored red. Why? Because this is giving us confirmation that the short-term trend is down. So now we're in sync with the strategy generated signal. So if we look at this older chart of ROST, we are below the 50-period moving average, and we see here that we have a number of sell signals that were generated. Now, obviously, just looking at these, nothing really happened with the first 3 signals generated. In fact, you may have even gotten stopped out if you had a tight stop. All right, so how could we have known which one of these signals to take? Remember, if you have a sell signal, it must be colored red in order to be confirmed by the PET-D. So if we add the PET-D, we see that each one of these sell signals was colored green. Therefore, we would have bypassed all of these, which may have resulted in losers, and not taken them. But now the 4th signal was confirmed by the PET-D and colored red. So you would have had the confidence to take this trade, and look what happened. Okay? You see how simple this is. We're not guaranteeing that this happens 100%, but you've now put the odds in your favor by applying the PET-D. You now have this dynamic duo, and you have the confidence to take the trade. All right, so let's look now at some current strategy number 4 and pet D examples. These are our dynamic duo in action, going back a couple of months and even a couple of days. We start off with KLAC. We see we had 2 signals here, and one in October and one just about a couple of weeks ago in November, coming into December. Obviously, this one did not work out well. It has a red arrow there because it didn't work out well, but this one did. How could we have known in advance whether we should have taken it or not? We apply the pet D, and a buy signal needs to be confirmed by being colored green. It never was colored green. It was colored red, so we wouldn't have taken this, and we wouldn't have had a loss. But this one, a couple of weeks ago, we would have taken, and we had a nice gain, roughly from 64 all the way up to 71 if we wanted to stay in that long. How about ABX? Well, we had a buy signal, which obviously was a loser, and a nice sell signal. Once we applied the pet D, we see that the buy signal was colored red. Remember, buy signals need to be colored green, so we would not have taken this. But the sell signal was colored red, so it was confirmed, and you see how much lower ABX went. How about BBY? Another buy signal that did not generate gains. All right, you may have been able to squeeze a little bit of gain out of this, but you would have had to been very quickly. But it wasn't a very good trade, not a nice trend behind it. But another buy signal coming into the beginning of November, which produced very nice gains. How could we have known which signal to take? Well, if we have 2 buy signals, both bars should be colored green. If we apply the pet D, we see that only this bar was green, actually. This bar was red. So we wouldn't have taken the first signal, but we would have taken the second. In letter K, we have 2 more signals. One is a sell signal, which would have resulted in a loss, obviously, because it never really went lower. And then we had another one about a month ago that was a buy signal, all right? And that one resulted in a nice gain of 2 or 3 points. How could we have known which one to take? Well, the sell needed to be colored red, and the buy need to be colored green. If we apply the pet D, we see that the first sell was colored green, telling us that the short-term trend was up. Therefore, we don't want to take it. We would not have produced a loss. But we would have taken the second signal, which actually generated a nice gain. Now we see here in Netflix, we had 3 signals coming in October all the way into roughly about 2 or 3 weeks ago in November. Now, actually, every signal that would have been generated here by strategy number 4 was a profitable trade. But we marked this one red. Why? Because remember, in order to go short using strategy number 4, we need to see that the bar is red. Once we apply the pet D, we see that this first bar, this first signal that was generated by strategy number 4 was green. So you don't sell on a green bar. So we would have bypassed this. But 3 days later, we got another chance to get in. And this bar was colored red. So therefore, you got in maybe 5 points lower, but that's okay because you would have taken advantage of this huge gap to the downside. Now, just about 3 weeks ago, another signal was generated to go short. It's colored red, and it went roughly from 380 all the way down to 340, another 40 points in about 2 or 3 weeks. Now, here's to show you once again that things don't always work. Remember, we're not going to promise you that every strategy trade works perfectly, even if it's confirmed. So I don't want you to think that, wow, just because it's confirmed, it always works. Here's an example of how consistent this strategy can be, though, because here was a buy signal that obviously turned into a loser, and then followed by a sell signal, which turned into a winner. All right. Once we apply the pet D, we see that the buy was confirmed. So you would have taken this trade, which would have resulted in a losing trade. But that's okay. Here's where we talked about strategy number 4 being so robust. Had you continued to trade and still had the confidence of using the pet D, you would have taken a signal 2 days later to go short. You would have exited the first trade with a loss, now gotten in short, and you could have recouped all your gains and then ultimately made money. Remember, we said it's about 2 steps forward, 1 step back. 2 steps forward, 1 step back. From time to time, you will have minor losses, but it's a numbers game. As long as you continue to apply these sound techniques that don't rely on some trading guru or some chat room, but just on the market itself, you'll get that confidence to take the trades. Here's another example in FISV. Sometimes the best trades are the ones you don't take. Here was a sell signal generated by strategy number 4, the red arrow telling us that the strategy generated a sell signal. Now, normally you would have taken this trade and ended up with a loss because it went straight up. If you applied the pet D, You see here that it was green, so you never took the trade. And there hasn't been a signal generated yet in FISV, but that's okay. We never lost anything, so sometimes the best trades are the ones you never take. Now, this can also apply to the commodities markets. Here's a chart in crude oil, okay, going back to October all the way to the first week in December. We see here that we've had 3 signals to go short by strategy number 4. All have been profitable, and all were confirmed by the PET-D. Why? Because they were all red. All sell signals need to be confirmed red if you're applying the dynamic duo. And SLV, you can also apply this to ETFs. Here's the ETF of silver. We all know that silver has been going down. And looking at this chart, one would say, well, it looks like it's bottomed out and we're starting to go higher. But according to the strategy rules, we are still in an overall downtrend. Therefore, the strategy generated a sell signal. Okay? And we just don't want to take the signal. We want to use the PET-D and make sure that all the bars are colored red, which they are. So you see why you had the confidence to take these trades. Now, we've shown you stocks, we've shown you ETFs, we've shown you commodities. How about the futures markets? Here's a weekly chart of the E-mini going back to 2013. For the past 2 years, we've been going straight up. We showed you that earlier. But now look at these buy signals that were generated using strategy number 4. Each one would have been profitable, and each one was confirmed using the PET-D. Why? Because they were colored green. If they were colored red, we would not have taken them. And we can go to a 2500 tick bar. This was on the 3rd, which was yesterday. If we look here at the bottom left-hand corner, it says 12.3. This was yesterday's chart action, the entire day from the opening to the close. We believe had 9 signals that were generated using strategy number 4 that were actually initiated that you would have entered. Now we see here that we had, out of the 9 trades, 2 were losers, and the remainder were winners, even small winners, but you still would have had some nice gains if you were getting in and out quickly. That's the way most day traders like to trade. And if we apply the PET-D, we see that all the buys we took were colored green. Here's a buy that we did not take. Why? Because it was colored red, and that would have resulted in a loss. But then another buy was generated, and it had nice gains. It continued to even go higher. You had another buy there. There was another buy signal generated right here, colored red on this tick chart, so you would not have taken it, but it was followed by a sell that was colored red, so you would have taken that. And then 3 more buy signals that led to a nice end-of-day rally. Now we can apply this once again to the Forex currency pairs. The Canadian dollar had 3 very nice buy signals going into October, and all 3 were colored green. And the British pound has had nothing but valid sell signals. This is how robust this strategy is, because it works well even on its own, but you want to have that confidence to ramp up your odds for success. So when you apply the PET-D, when you have the dynamic duo working together, you want to see sells that are all colored red. And as we see here, each and every one of these was confirmed by the PET-D. And lastly, we can apply this to weekly charts. We had 3 signals that were generated using the strategy number 4 on the weekly chart of the euro dollar. 2 were winners and 1 was a loser. The 2 buy signals, the first one was a winner, the second one was a loser, not going anywhere, going lower, and the third one was a sell, which turned into a very nice winner. If we apply the PET-D for confidence, we see that the buy signal was colored green, so we would have taken this and roughly made about 200 or 300 pips. That's $2,000 or $3,000 per lot on a weekly time frame. Here was the losing trade, but we would not have taken it. Why? Because the buy signal needs to be colored green, and this was colored red. But weeks later, we had a sell signal on a weekly time frame to go short, and we see here that we went roughly from 1.3600 all the way down to 1.2400, and we're just talking about thousands of dollars if you stayed in this trade on a weekly basis. All right, so let's recap before we go to questions and answers. We shared with you what the PET-D is. It's not a system. It's not a strategy that gives you buy and sell rules. It's simply a short-term trend identifier. It's a proprietary algorithm. I'm sorry, we can't give you away the rules because it's that important, and it really is that powerful to us. We have hedge funds, people that companies that want to purchase this from us and use it solely for themselves or even license it. We may even go that direction. But for now, we're just keeping it in-house. This is a proprietary algorithm that I've been using for roughly 30 years. We also have strategy number 4. Okay, strategy number 4, our most consistent strategy. This is something I use just about on average on a daily basis whenever I trade. I apply this to my intraday trading, but you can use this in any time frame and in any market. We have tremendous success with this in not only stock market, as you saw, but also the forex markets and the futures markets. Now, the beauty is both of these things are tremendously powerful in their consistency. But once you apply them together, you create our dynamic duo. Why? Because one is complementing the other. The PET D is complementing and assuring you that it's okay to take the signal. Why? It gives you that extra bit of confidence you'll need as a confirmation. So in it by itself, strategy number 4 is a great strategy with tremendous consistency, but you ramp up the odds for success even more when you apply the PET D. This is why we call it our dynamic duo. So ask yourself, do you think just one of these techniques could have helped your trading? If you just have a strategy that you feel comfortable with already, what if you could have applied the PET D and just used that as a confirming tool for whatever you're trading right now? Or let's say you're not happy with your strategy. You don't like your strategy at all. It hasn't worked in years. You're about ready to give up. Strategy number 4 is a great, consistent strategy. We just gave you 2 of the rules, in fact. If you're going long, price must be above the 50 period. If you're going short, price must be below. And you also want to look for that bar that closes in the top quarter of its range if you're going long, or the bottom quarter of its range. You can just take those 2 components right now and apply them to whatever you're trading, and I can almost tell you that it will ramp up your odds for success, because these are very important pieces of the puzzle to any trading method. So you could take them together and put together some type of strategy that you constructed on your own. So ask yourself, are you where you wanted to be at the beginning of 2014 in your trading? I know so many of us make hope and promises that we're going to start off this year and do fantastic with our trading, and most of us fall short of that, okay? What if we could offer you something deeply discounted, roughly about 40% discounted, so that hopefully 2015 would get you on the right track? Well, here's where we're introducing our 2-for-1 attendee special. This is for all the attendees today. This is our dynamic duo. It's the Momentum Trader strategy number 4, which virtually works in any market and in any time frame, including the PET D. You get instant course access because this is an online course. All right, detailed instruction with 5 videos. And you see how much attention I give to detail in really trying to teach you how to use these things. Well, we go into much more detail in all of these videos. In the video courses, we tell you where the exact entries, exits, and stops are. So it's, what I gave you today were just pieces of the puzzle. In the courses, you're going to learn everything. You're going to learn exactly how to spot where to enter, where to exit, and even how to trade more aggressively or conservatively if you'd like. We're also going to provide you with those signal alerts and the add-ons. So in other words, as learning tools, you'll be able to see the buy and sell arrows as they appear when a signal is generated. But you'll also get the color bar algorithm for the PET D. So it automatically will turn your bars from red to green, okay? And lastly, you're going to get access to my personal email address. So any questions you have, it doesn't matter if you've been a student for a week or for a year or for 10 years, you can always email me and ask me any questions you would like. Now, just to show you, if you're still not convinced, let me show you what happened today. This was a 1-minute chart of the E-mini, the first 3 hours of the trading day. These were all the signals that were generated using strategy number 1. As you can see, they were all confirmed using strategy number 1. Okay, the sell signal here was confirmed red. Now, sure, this one would not have worked all that great, the very first signal of the day, but you had another one. Remember, it's about consistency and numbers game. So you would have jumped back in and gotten into the second one, which worked out fine, pointed to the downside. Then you had a third sell signal confirmed by the PET D, and you could have taken as much as you wanted out of this trade, and followed by another sell signal, which had another nice move to the downside. Roughly an hour and a half into the trading day, 2 more sell signals which were confirmed. All right, and you had another 2 points to the downside. Remember, this is a 1-minute chart, so you're in and out very quickly. And then when the market started to rally, roughly around 2 hours after the opening, the bars all turned green, and all the buy signals were confirmed. So this was today. This was this very first moment. So for all of you intraday traders who want to be able to use this a lot and get a lot of signals, you'll see how well this transfers over. These are all valid signals that you would have entered and you could have taken advantage of using our dynamic duo. So once again, we're offering this 2-for-1 attendee special. Now, if you purchase both of these are how powerful these are. If you purchase both of these techniques that I've roughly been using for about 30 years, if that's how sustainable they are, I haven't altered or deviated anything from the techniques or how to actually trade them. We offer this on our sister site, Pro Trader Strategies, roughly for nearly $3,200. That's how great these are. But we're dropping it down roughly $1,200 or nearly 40%. Down to $19.95 for all the attendees today. Both of these great trading techniques, and on top of that, we're including payment plans. So if you can't meet the $19.95 in one lump sum, you can come up with a type of payment plan that best meets your needs, and you can be up and running as early as today with a small deposit. So this is a great way to conclude 2014 and get on track for 2015 by becoming a part of the specialist trading team and by having our most popular and probably most consistent strategy duo together. That's our dynamic duo. Now, for more information, you can contact our sister site, which is Pro Trader Strategies. They market and promote all of my techniques. You can email any one of their trading consultants to put together some type of payment plan at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. Now, if you're ready to start and you want to be up and running in the next few minutes, here's the link that you can cut and paste onto your browser. You can simply put that up there and it will take you right to the discounted page. If you look in your chat box to the far right, you'll also see that link there. You can just click that on. You don't have to cut and paste to your browser. You can just click that on and it will take you to the discount page, and you'll be up and running in a matter of moments. Okay? So I'm going to leave this information up on the screen while I open up the question and answer box, and I want to thank you all for waiting to ask any questions. Let me just open this. Gary asks, is the Pet D a one-time purchase? Yes, it is. In fact, as I stated earlier, Gary, we've had a lot of interest in licensing this because we have some major firms that are very interested in using this in hedge funds, and the way we would do that would be through a license. If we go that route, you're going to have to pay for this maybe 4 times a year, and it'll probably be a lot more expensive than what the full price is right now. So it's probably best, if you're really interested, to take advantage of this right now, because not only are you getting a deep discounted price, you're also getting a strategy, one of our best strategies thrown in, and it's yours for life. There's no other payments included in any of this. Okay, so it really is a great deal. On top of that, I forgot to mention, once again, you can devise a payment plan, which we may not be having for long as well. So there's a lot of advantages. Once again, if you want to really take control of your trading for 2015, this is, in my opinion, the route to go. Okay. David asks, will you have a transcript of this session? All of our sessions are recorded, David, so you can request, you can email or call any one of the trading consultants at Pro Trader Strategies, and they will send you the link to this recording of this presentation. Mike says, on the Yum trade, where was the 50 moving average? Could not that have told you not to take the first buy or not to take the following sell? Well, first of all, Mike, we didn't put the 50 on there just to keep things as simple and just to show you how this process works. But a signal would not be generated if it were not in line with that. Okay, so if you're saying, could that not have told you to keep you out of the first buy? Well, it would not have created a buy if it were below the 50. Remember, a buy signal will always be generated above the 50. A sell signal will always be generated below the 50. So therefore, just by the very fact that a signal was generated meant that it was in sync with that rule. Okay, but that's very good. I'm glad that you're noticing that. Once again, this is what education is about. I want all of my students and members, as well as just the people that attend my webinars, my free webinars, to at least look at these concepts and apply them. We give them away for free in our free weekly webinars, so you can start using these and apply that 50-period moving average with any technique you currently use, and it will ramp up your odds for success. Okay. Let's see here. Don asks, is there a scan for stocks? What data source can it be used with? Hi, Don. As you see here, yes, there is strategy for you can run a scan to find stocks. And if you're asking for what data source or what programs, because I know some people are very interested, you can use these programs on TradeStation, NinjaTrader, MetaStock, and MT4. Okay, so those, and also Thinkorswim. We're putting that together with Thinkorswim, but that's a little bit more complicated. There's a couple of things you have to change, but you can also apply it to if you use Thinkorswim. Okay. Dave also asked, great entries. Do you have an exit strategy? Yes. Well, we don't have an exit strategy. The entire strategy gives you all the rules for entry, stop placement, money management, exits, and then we give you 5 or 10 more different ways to exit, different ways to enter, different ways to place your stop. This is all in the course. We just can't give that away because it wouldn't be fair to the people that have already spent close to $3,200 to get this information, and we're offering it to you roughly about 40% cheaper. So we want to hold some things sacred for them. So, but you're getting a great deep discount, roughly $1,200 off what normally people have paid for this information. But that's all included, yes. Let's see, John asks, if you use a 50-period moving average on a daily chart, should you use a 10 simple moving average on a weekly chart? That's a very good question, John. No, it's our philosophy to keep things as simple as possible. That's, once again, most traders lose because they overcomplicate their trading. How do they overcomplicate their trading? By listening to outside sources, by having someone or something tell them what to do, and by applying too many indicators and having too many requirements that need to be met, changing back and forth. So therefore, if we're trading a weekly chart, if we're trading a 5-minute chart, we want to keep things the same. We don't want to be changing back and forth to meet the market. We want to be, very consistent in what we're looking at. We have found over the years, the way I was taught and what I've found for the last 30, 37 years is that a 50-period moving average works well in all markets and all time frames. But please remember, it's not a strategy, it's not a system, it's just a technique to get you on the right side. So in other words, if price is below, it doesn't mean go short at the market. It just means that from now on you should only be looking for short setups, regardless of what strategy you're using. It doesn't have to be one of mine, it could be anyone's. And if price is above, only look for buy setups. If you start to quantify too much with, say, well, for longer term, I'm going to use this moving average. For shorter term, I'll use this. It overcomplicates things. And I found that the 50 period seems to work well in all time frames in all markets. Okay, so that's why we keep it simple like that. Okay, I hope that answers your question. Ken once again asked, does your strategy number 4 or pet D have exit signals? Yes, everything comes with an exit. We teach you numerous ways in which to exit. As I stated in the very opening minutes of the presentation, we're an educational company. So I'm giving you all this education that I've accumulated in 37 years so that you can either use the basic format or mix and match to meet your needs. We have some traders that like to squeeze as much profit as possible. We showed you some examples, and they want to stay in the trade for as long as possible. So we show them how to do that. We also have traders that want to be in and out. That's okay. They want. In fact, that's personally the way I trade because of my time restrictions. I'm either giving webinars or teaching or coming up with presentations. I can't hold positions the way I used to. So I have to be able to trade something where I'm in and out rather quickly. So that's the way I trade. So no two traders trade alike, and that's fine. That's the way we feel will get you on that road to consistency. You have to be true to yourself. So we give you all the components so that you can devise your own method based off of the structure we give you. So you can stay in longer, you can enter at a different place, you can use a different stop placement, different money management. All this is in the course, okay? Satej asks, is there a way to teach to avoid chop in strategy number 4? Well, first of all, Satej, there's no way to avoid chop. I've been trading once again for 37 years, and you're always going to get some type of chop. It's just part, it's the price of doing business. That's just part of being a trader. There will always be chop, and it's very difficult to trade because obviously you're getting whipsawed. Even, excuse me, strategies that are based off of trading chop get whipsawed. So what we try to do is simply avoid it, and the way we do that is by using our tools. Two of the best tools I knew is by using the 50-period moving average, because many times when you're chopping, you're going above and below the 50-period moving average. So we need to see that there's some consistency or some consecutive closes either above or below that 50 in order to tell us what side we're on. And if we keep bouncing above, below, well, we don't have enough bars either above or below to tell us to go long or short. Therefore, we have no trade. Excuse me. Conversely, the pet D will do the same thing. It needs enough data to generate enough red bars or green bars. Now, The PET-D does not dynamically change, go back and change a bar that was red back to green and so forth. It will change intra-bar, but once it's red, it stays red. So many times in choppy markets, you'll see a green bar followed by a red bar followed by a green bar. So this is basically telling you there's no trend. Remember, we cannot do anything unless we have a trend in place. So that's the beauty of these two techniques. They keep us out of a lot of chop. From time to time, we will be in chop and we will get whipsawed. But that comes with any trading methodology. But we feel confident that our tools can keep us out of that chop a lot more than other methodologies. Okay. BM asks, for how long do we get the signals? You actually, I believe you get those for a year, but I would check with the people with Pro Trader Strategies just to clarify that. But trust me, after a few weeks of practice, you'll be able to see all these signals. You know exactly how they're generated. You know exactly how to scan it. You know exactly how to see them. So it's very simple to see, but it just needs a little practice, because most people have never been taught to trade this way. And when you see it, you go like, boy, this is just too simple. That's the way trading should be. That's, the reason why I struggle is because I overcomplicated my trading. The minute I start to simplify it, I started to become consistent. And you can't believe how simple things are. I don't rely on any news. I don't rely on any chat rooms or trading rooms. We don't have those at Specialist Trading because we feel that most traders use those as a crutch to listen to what other people are doing, and thereby you're not becoming part of the process. You're relying on an outside source. We don't want you to do that. So we don't believe in those things. We don't believe in watching news events or watching TV to find out what the people are saying, because there's really no reason to. We showed you how well these techniques work well in advance of news events. Okay? Let's see here. Let me scroll down. Let's see, Terry says, I just purchased the strategy number 4 last week. How does this work for someone like me? Well, I see what you mean when you're talking about the PET-D with the strategy number 4. Well, first of all, Terry, I want to thank you for your purchase and welcome you as a member. But also, don't worry. We can apply what you paid for strategy 4 towards the combo. So it's not like you're going to have to pay for strategy 4 again. We would never do that to anyone. The majority of us at Specialist Trading and Pro Trader Strategies are traders, so we would never, make you pay twice for the same thing. We're an educational company. We're more about educating you so that you can get on that road to consistency. Okay? So don't worry, Terry. We'll just, just basically take off that charge and just give you the discount with the strategy number 4 discounted off. Okay? Satej asks, with the MT4 PET-D indicator, does it give an output so that it can be used in coding an expert advisor or an auto trading strategy? First of all, we're not about auto trading because, once again, as you see here, auto trading takes you out of the game. We don't want to do that. We don't want you to rely either on a machine or someone doing your trading for you. It totally goes against our philosophy. We want you to be a part of the process. If we feel, it's my opinion, if you're not able to trade, if you're not able to be in front of your computer trading, you shouldn't be trading. Now, there are different ways to trade. Instead of intraday trading, you can trade daily bars, where you can basically trade this, enter orders, watch for a few moments, and then monitor it maybe once or twice during the day. But if you feel that you want to be auto trading, that, once again, you've just taken yourself out of the game, and that, in my opinion, is a recipe for disaster. I've been trading for a long time, and I don't know anyone who's been successful trading that way. So we don't believe in that. It goes against our entire philosophy, okay? Jim asks, which signal do you use when the PET-D has a long series of green bars, but there isn't a strategy number 4 buy or sell signal? Do you follow the PET-D or do you wait for strategy 4? That's a good question, Jim. Well, first of all, in the PET-D course, we give you a number of different techniques for entry. They're not strategies per se because they don't come with complete rules like a strategy, like stop placement, exits, and things of that nature, but they really tell you indications of entry points. So that's all taught. In fact, one of the best ones I use today using the PET-D, which is taught in the course. It's a great pullback technique. So if I'm waiting for a strategy 4 signal and one isn't generated, but I see this pullback technique using the PET-D, I'll use this. This is all in the course. In the PET-D course, we give you 4 different entry techniques. There are 2 pullback techniques and 2 consolidation techniques, as well as stop placement techniques. As well, we give you strategy 4 with all the different rules applied in those. So we give you a lot of great free information so that you can be up and running rather quickly with all of this great. Remember, we're more like a school. We want to teach you and educate you and give you all these nice components, and then you can pick and choose these high-level components to meet your needs. And so you can, some traders want to use an aggressive entry. Other traders want to be more conservative. Some traders want to use the exit that keeps you in longer. Other ones want to get in and out quickly. So we give you all of this in the course. Roger asks, Steve, can the dynamic duo help to determine direction prior to earning releases? Well, first of all, Roger, we don't care about earnings. I haven't looked at earnings in 35 years, so I don't know. I stopped looking at earnings when I was on the floor, when my mentors, who were specialists themselves, they used to trade IBM, Compaq Computer at the time, and other high, issues. Let me see, I'm trying to think of other ones. Reynolds Metals, also, General Instruments at the time. These were big, hi-fi companies. They never looked at the earnings. They never cared about them because they had the confidence in these techniques. So once they told me to stop looking at them, it was very difficult for me at first, but then I stopped looking at it. And listen, if you must feel that you have to trade out of these outside sources, we would say go ahead. If you cannot wean yourself from them, just take it with a grain of salt. Rather than, what most people do is they put 80% of their importance in these things, maybe scale it down to 10 or 20% of your importance. These things are very good to know if you're an investor or you're trading long term. But if you're trading, if you plan to get in and get out in a couple of weeks or maybe even a month, there's really no importance we see of having to follow them. So I really don't, it's hard for me to answer your question because I haven't looked at news in over 30 years, okay? And I'm still trading, so that must be a testament to these techniques that they do work. BM asks, for how long do we get the PET D charts? Well, the PET D is yours. This is not something that is going to dissolve in 2 weeks. Once you get the PET D, you apply it to your charting software, and it's yours. It's there for good. So it's not something, once again, that you only have 6 months to look at and then it dissolves. It's yours. That's why we say it's in your best interest to take advantage of this, because if we go to some type of licensing, you will have to pay probably a much higher price for the PET D and strategy number 4, and you'll have to probably pay maybe either 2 or 4 times a year. Whereas now you purchase these things at a deep 40% discount, and they're yours for life. There's nothing that we're going to ask back, or it's going to have to be renewed. Okay. Let's see. Someone is asking the add-on for Metastock for Dynamic Duo, the cost. As you see here in the answer box, they answered this, the Pro Trader Strategy people. Yes, it works on Metastock, and the cost is $19.95. It works perfectly on Metastock, in fact. It's part of the special promo, the annual lease going forward for those who don't own it now. So it will be, contact the people at Pro Trader Strategies. They can get you set up with that for their promo. It works on Metastock, and like we said, you're getting this deep discounted price of $19.95. And remember, we don't want to forget, you can have the option of using a payment plan. So if you can't come up with $19.95, we realize that may be a lot for some people. That's okay. You can come up with a deposit. Okay, work with the people at Pro Trader Strategies, and they come up with a deposit. You can start looking at the videos in the next few moments, in the next hour or so. Okay. Just a few more questions and answers before we have to sign off. Let me see here. Is some alarm generated when the buy signal is generated on MT4, or do we have to sit in front of the computer to see the signals? I don't believe there is an alarm, Satej, because I don't personally use MT4, but I know that you would have to once again check with Pro Trader Strategies, because I know there are different setups for the different programs. But once again, this is something that we want you to be able to see on your own. We don't want somebody or something telling you. Even though we provide you with these add-ons, we want you to become a part of the process and to notice it on your own, okay? It goes against our entire philosophy to have people relying on things. They can either be bells and whistles, or they can be someone in a trading room. Because, once again, in 37 years, it's been my experience that traders that do this, myself included, really aren't consistent, and it's more of a recipe for a disaster because you've basically given your power away to someone or something else. The traders who are consistent, the traders who are still trading 20, 30, 40 years down the road are the ones who are a part of their trading process. Okay? I have time just for one more questions. Let's see, how do I apply the PET-D on a free charting website? Well, as you can see here, you can use it on NinjaTrader. So NinjaTrader charges for free with the end of year data. So you can use that. That's a great way to do that as well. Okay. Come by ask if they could listen to this presentation again. Yes, just contact the people at Pro Trader Strategies, and they'll send you a link right away for the webinar recording. Now, in closing, once again, here's all the information you need. I'm sorry we couldn't go through all the questions and answers, but we just have to sign off now. But one of the things I want to, once again, stress, look back at your trading this past year. If it's not that consistent, let's say you had 2 or 3 great months and then you had 1 month where you gave everything away and you're back to normal, or you're back to where you just started, or even worse, now you're in the hole. Well, this is the way most traders trade. This is the way I used to trade. I would finally think that I'm on track. I'd have some nice trades, and then my next couple of trades, I'd give everything back. There's no consistency in that type of trading. That's what we're trying to get away from. We're trying to get you to the point so that every month you can see your trading become more and more consistent. You can see your equity curve start to slope slowly but surely upwards instead of this kind of roller coaster where it's riding high in April, shot down in May. If that's what you're looking for, this is what we're trying to offer through our dynamic duo, okay? So give yourself that permission to become consistent, become a part of Specialist Trading and Pro Trader Strategies, and sign up for the dynamic duo and get back on track in 2015. We really feel that this is your best chance for becoming consistent, okay? I want to thank you so much in closing for attending today. I hope that you take advantage of this special offer. Contact the people there at trading@protraderstrategies.com or call them directly at area code 310-598-6677. Thank you so much. We'll see you next time. Bye-bye.